Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, today I think that we could take a look at the Great British Pound finally. So last year, close to the end of the year, we have abandoned the tracking of the Great British Pound because it actually hasn't provided us any valuable setups, and mostly we were expecting the upward retracement here, some deep retracement following to logic of the patterns that we have on the monthly and weekly chart. But as you can see, upward retracement was relatively small. I mean, in terms of the monthly chart, of course. So all that Great British was able to show is just a bounce up to 127.50 area. As you can see, this retracement was finalized by the butterfly pattern. We have talked about it. As you can see, this left wing, right wing, and market since then starting to move down. Recent drop, as you can see, was mostly triggered by the Theresa May comments on the policy of the Great Britain when the Brexit procedure will be accelerated. Since you probably know the legal act that Great Britain has to show not later than in March the definite steps how the Brexit will take place according to the Euro Union law. And in the comments, she mostly given a hint on possible hard Brexit, as many investors call it this moment. So she talked about the border protection and something of that sort. And this has led to the drop on the Great British Pound, as you can see. And actually, I currently do not want to talk on some really long-term perspective and some long-term analysis, but also on the tactical, since on the daily chart we have not bad pattern to watch for. As you can see, a market could form the butterfly. So actually, a retracement first was standing in this flag pattern. Recently, it has been broken down. So late December, as you can see, market has retested this border and collapsed again, based on the Theresa May comments. So market right now stands to the downside. Here we have some signs that tell us probably that these lows will not survive. On the weekly chart, guys, this action, if you will take a look at it, you will recognize here some kind of the bearish dynamic pressure that also suggests the taking out of these lows. But even if we will not take into consideration this bearish dynamic pressure, you could get other signs that tell you that market should drop below these lows. First of all, take a look. We have here this minor A, B, C top pattern. Minor, of course, in terms of the larger picture, in terms of the weekly chart. So this ABCD extension, minor target 618, stands below these lows. And usually, when the market already starts move down in the direction of this target, it usually reaches. And this target stands below these lows, the chance that these lows will survive very small. Another reason why we think that market could drop even further is that on the weekly chart we have ABCD pattern right from the top, and the market already has hit 618 target, 100% target, and 1618 extension of this large pattern on the weekly chart. Stands at 116 area. But the situation stands so that market already stands below the 100% target. It means that it already has started action to the downside in the direction of 1618 extension. That's why as market stands on this road, there's probably significantly also increased chances the market will move below these lows. Finally, we have the butterfly here, guys. This 127 extension stands on 118. ABCD target stands 119. So this stands very close. As you know, the Great British Pound is very volatile currency, and 100 pips is not really big distance for it. The one problem here is that this target stands slightly below the oversold As you can see, this oversold level. But as market will start to move lower, this oversold level also will drift slightly lower. But I think that it is valuable targets for current week or maybe for the next week. But that is the pattern that we will be watching for on Great British Pound. It's really interesting. So another problem, guys, with the Great British Pound, or maybe not quite a problem, this problem for the bulls probably, but for the bears maybe this is an advantage, that actually on the way down, Great British Pound already has broken all valuable fib levels. Actually, you do not have any supports that come in from the fib levels. The only support that you could get on the Great British Pound is there are pivot points, yearly pivots, monthly and daily that we are usually following off. Oversold that you could get the support and some extensions. So as we have estimated, the oversold and extensions provide you support only at 118, 119 area. Market is not at oversold on the monthly and weekly chart, so that's why it has relatively free space till 118, 119 area that we have specified. Speaking on the pivot point, so if you'll take a look at the hourly chart, you will see that market right now stands between the weekly pivot support 1 and monthly pivot support 1. And actually it is forming some kind of the shape, maybe it's double repo pattern or something of that sort. Currently, guys, it's very difficult to say whether this pattern will work or not, but here we have unfilled gap right on Monday. It's after the speech in the weekend by Theresa May, so market has collapsed. This gap stands open. It hasn't filled. It wasn't filled totally, so you can see there's some free space exists. Since this gap stands on the intraday chart, it's very rare that market, and especially on the Forex, leaves gaps unfilled. It's very rare happens. That's why it's difficult to say whether this pattern will work or not. I mean, the double repo pattern that's forming here, or better to say it has been confirmed already. But existence of the unfilled gap makes me think that really some deeper retracement could happen. So this stands approximately at 50% resistance of all thrust down. That's matched to double repo target. Maybe market will try to make the upward retracement and fill this gap, especially if we take into consideration that many markets across the board, gold market, euro currency stands in upward retracement right now. So we have talked about it in the weekly research. That's why maybe this will provide some support to Great British Pound as well, and maybe it will show some upward action to come to fill this gap, to close this gap. Anyway, if you would like to take the position here, it's probably a good idea to get some upward bounce. So we can see we have resistance around 22.14, 22.40 areas, some kind of confluence, but it's a bit wide for our chart. Anyway, as you can see, different level stands in this area. This first level, second level, of course, will be an area around the gap. So that's why I watch for upward action here for some retracement if you would like to take the short position following this butterfly pattern. So that's our current view on Great British Pound, and as you can see in the tactical perspective and the short-term perspective, existence of this butterfly, existence of the targets below these lows makes the overall situation very interesting and significantly increased chances that Great British Pound will drop here lower and will complete the first this area around 118 area, but next destination point major weekly target stands at 116. So let's see what we will get in the current week, but first, guys, wait for this double repo and upward retracement. So watch for approximately 122.80 area. This market will fill the gap. Maybe some reversal pattern will be formed here that will let you to take the short position.